Alessandra Barrett, Senior Content Editor for JOC, and I'm at our 2019 Inland Distribution Conference with Lee Klaskow, Senior Analyst for Bloomberg Intelligence. Great to have you here, Lee.
Thanks for having me.
This morning you were on our Freight Outlook panel. Can you recap that a bit for me?
Sure. Well, before we talk about the outlook, we've got to talk about where we are today. We do a quarterly survey with truckstop.com, and that survey is showing expectations for rates and for demand are nearly at all-time lows. So sentiment is extremely low in the spot market. You've seen rates go down about 18% this year, and things look pretty bad. When we take a step back, things aren't as bad as they might seem. Rates are still up 7-8% versus 2017. So while rates are down versus last year, which was a once-in-a-generation market due to a number of factors, hurricane rebuilding, ELD implementations, a tight labor market, good economic growth, that really drove spot rates into a level that really wasn't sustainable. So we're building a base off the new norms, or creating a new norm, I should say, in terms of rate expectations. And if you look into 2020 and beyond, the reality is economic growth will moderate, which isn't necessarily a good thing. But we do believe that with some economic growth, you could see contractual rates increase slightly. And when we say slightly, we're talking a couple hundred basis points in 2020.
Was there a particular theme that came out from the panel, something that everyone seemed to touch on?
Well, I think most people looked at intermodal. Intermodal has been down this year. Intermodal used to be a driver for the rail industry. Intermodal's down around 3% year to date. It's being driven down by a number of factors. PSR, precision scheduling railroading. CSX implemented that. They cut a lot of service. UP cut some services. You have that coupled with, as we were talking about earlier, the depressed spot rate in trucking from last year. So you got a couple hundred basis points of share going back to trucking. And expectations are, though, this is not like the new normal. And next year we should see some improvement in intermodal volumes. And that's really going to start to see it in the first quarter of 2020 as CSX laps some difficult comparisons from the cutting of services.
What challenges do you think are going to dog us for the 2020s?
Sure. The biggest challenges that I see going forward are really geopolitical. In an era of increased protectionism, 4 a.m. tweets, China-U.S. trade tensions, probably not getting any better in the near term. Those are really the big unknowns, because a lot of the demand things that we were talking about in terms of intermodal being down or rates being down on the trucking market, a lot of that had to do with pull forward demand due to the tariffs. So there's inventory levels are high. We got to work through those inventory levels. We have to have some economic growth, which it looks like we're going to have some, maybe 2% growth. So that should really help things next year.
Always great to get your perspective. Thanks, Lee.
Thanks for having me.
I've been speaking with Lee Klaskow, Senior Analyst for Bloomberg Intelligence.